Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian equity benchmarks extend their opening gains to trade at the day's highs. Infosys surges to a record high.
A public interest litigation against Indiabulls Housing Finance alleges the illegalities, violations and siphoning of funds by the promoters, calls for a special investigation team to look into the matter. Market regulator SEBI has ordered a forensic audit of Sun Pharma's financial statements for 3 years starting 2015. And Mukesh Ambani's Reliance announces tariff plans for its Jio fiber broadband service starting at 699 rupees a month. All right, let's first take a look at how markets are faring. Yatin is here with us. Afternoon.
Good afternoon, Ira. And if you look at the markets, 0.7% higher for key benchmark indices. Nifty 50 is rather looking stable for the trading day as of now. If you look at the advance decline ratio, also healthy on Nifty 50, 4 advances to every 1 decline. Apart from that, sectoral indices like the Nifty Bank as well as the auto index, the Nifty Auto Index is outperforming the key indices at this point in time. Amongst the gainers, we have Tech Mahindra, Maruti Suzuki as well as Axis Bank moving in trade, almost 3% up for all of these names. Eicher Motors and NTPC are also the other ones which are quite active in the trade for the Nifty 50 basket. Losers, Indiabulls Housing Finance, that stock is under pressure. Stock is down 3.5%. Post Prashant Bhushan has claimed to get a public interest litigation going through the Delhi High Court. Of course, the company has denied allegations with respect to this public interest litigation, which is expected to get filed today. Sun Pharma, that stock is down 3% after the market regulator has ordered a forensic audit for its financials. Wipro, Yes Bank and GAIL are the other stocks which are the top losers at this point in time. Also would like to have some attention on PVR as well as Dish TV. These are the two stocks which were under pressure ahead of the Jio fiber pricing launch. And after there was no big price cut as expected by the marketplace, so both of these stocks are quite active in the future and option segment. 3% up for Dish TV and 4.5% up for PVR.
Yes, and thanks for that. Morgan Stanley has cut its earnings estimates for Indian companies and the Sensex target for June 2020. Darshan is standing by with the rationale of Morgan.
Yeah, basically, Harsha, what we've seen is that for the base case, bull case and bear case, all cases, the target price has been cut. And first of all, they're saying that the weak global backdrop that is there, that's the first reason why they've cut the target. And the risks that are there from share price to fundamentals is something that they have quoted why they have cut the target price. So from 50,000 to 47,000 is the bull case cut, 45,000. From 45,000 to 40,000 is the base case. And the bear case scenario goes down to 31,000. Even the EPS is cut for this year for FY20. They managed to keep it at the same level for FY21, but they have said that, it's below consensus now. The couple of things that they are saying that they expect that the earnings growth will likely grow or be better in the coming 2 years, but the pace of growth is much lower than what was forecasted. Monetary easing and normalization of government expenditure is in favor of growth, and acceleration in global slowdown is the key risk that they say. They are marginally overweight in India as far as their global emerging market portfolio is concerned. Some changes to the focus list. Concor, Oberoi Realty as well as Gujarat Gas are the companies that come into the focus list. They've closed out the underweight position on communication services and utilities, and finally they trimmed the overweight in financials by close to 300 basis points.
Thanks for that, Darshan. Reliance Jio has announced tariff plans for its Jio fiber broadband service 3 years after Mukesh Ambani-owned firm disrupted the telecom sector with free calls and data. Samit Sarkar is standing by with a snapshot of the plans and how they stack up against competition. Samit.
So if you see, Jio has come out with its broadband plans. Now it has around 6 plans in the range of around 699 to 8,499 rupees. And to avail this, one has to do a one-time payment of close to 2,500 crore rupees, which is towards installation charges and security deposit, and of which 1,500 rupees, that is towards security deposit, is refundable for the user. Now, mostly users would go for an annual plan because that has more benefits to come in. And let's see what are the benefits that an user would get from an annual plan. Firstly, it is the unlimited voice and data. Secondly, is the router and the 4K set-top box that is available free on the annual plan. Along with that, subscription to various OTT apps. We do not know which are the OTT apps so far, but that is what the letter says, that the OTT there would be subscription to various OTT apps. Along with that, the user would also get the television set, first day first show for movies and special sports content, but this is available only on selective plans that has been given by Reliance Jio. Now let's see see how the plans stack up to its nearest peer, that is Airtel. Now for the 699 plan, that is the basic entry-level plan that Reliance Jio has, the speed is close to 100 MB per second. The data is 100 plus 50, and here 50 is the additional 6 bonus data that Reliance Jio is giving for 6 months. The cost per GB is 7 rupees, and the cost per GB including the bonus plan is 4.7. Now for Airtel, it is 799. The speed is 40 Mbps. Data provided by Airtel is more at around 100 plus 200, and the cost per GB including the bonus data is as low as 2.7 rupees. Now when it comes to additional benefits, it is better from Reliance Jio. They are giving 3-month subscription for Jio Cinema and Jio Saavn, and a Bluetooth speaker worth nearly 3,000 rupees, while Airtel is only giving a subscription to Airtel Xtreme. Now on the mid-level plan, if you see, where Jio is providing at 849 rupees, the speed is same at 100 Mbps. The data is 200 plus 200. The cost per GB including the bonus data is 2.1 rupees. For Airtel, the plan is higher, but the offer and the data that they are providing is much higher. Now, as you can see here, the data is around 300 plus 500 GB. The speed that they are giving is 100 Mbps. The cost per GB including bonus is 1.4 rupees, and the content benefit that Airtel is giving is much more than what Jio is providing. As you can see here, Airtel Xtreme plus Amazon Prime and Z5 for 12 months and Netflix for 3 months, whereas Jio is giving OTT apps for 3 months and Bluetooth speaker worth nearly 4,000 rupees. Now a higher plan on this, if you see, it's for Jio it is around 1,299. The speed that they are giving is 250. Data is 500 plus 250. The cost per GB including bonus is 1.7. Now here additional benefit is that the OTT app subscription is available for 12 months, and a user would get a 24-inch HD TV worth nearly 13,000 rupees. On the other hand, Airtel is charging more at around 1,600 rupees. The speed is higher than what Jio is providing at 300 Mbps. The data is also more, that is 600 plus 1,000, and the cost per GB including bonus is lower, and the content benefit is similar to the earlier plan that Airtel had given, and for this also the content plans are similar to the earlier one. On the high level plan, if you see, Airtel is providing it at 1,999. The speed is 100 Mbps. The major benefit coming in from this plan is the unlimited data that Airtel is giving. The content still remains same for Airtel in this plan also. Now for Jio, if you see, it is 2,499 rupees. The speed is 500 Mbps. Data is 1,250 plus 250, while the content benefit is similar to earlier show, but the additional thing that a user would get here is a first day first show movie and special sports content that Jio is providing to its users. So what's the conclusion that we are getting from both these plans? Firstly, if you see, it is that Jio plans are priced lower and they are at a better speed, but the data allowance and the content offering from Jio is lower. Also, the cost per GB for Airtel is better, and for Jio it's on the higher side. And for cable TV operators, it's a positive thing coming in because they haven't bundled the cable plans so far in this, so it's positive for DTH and cable operators. Along with this, it is also positive for movie exhibitors like PVR and Inox, because the first day first show movie is available only for higher end plans, and the offtake for that would be limited because it's from in the range of around 2,500 to 8,500. So the offtake for that would be at a lower end. Also, Jio Wireless, that is the mobile operation, when it had begun, it had provided differentiated offer with better pricing, which is still lacking in the fiber to home, that is the home broadband business of Reliance Jio, that is Jio Fiber.
Saman, thanks for that. And here's what two telecom industry veterans had to say about the rollout.
It takes a lot more to roll out a fixed line network than a mobile network. And also the fact that the fixed line network and fiber or copper are not fungible compared to radio, and therefore it becomes a lot more to deploy capital behind all this and build up a consumer experience. Is there a great potential for fixed line given the trends in rest of the world? Because if the high capacity content has to be used, high clarity content has to be used, then fixed line probably is a much better solution and goes hand in glove with the growth in the mobile data. But India, to catch up with the rest of the world, I think has got a huge amount of opportunity over here. And secondly, the incumbents will be threatened with their copper assets, because copper will never compete with fiber. The other more important factor is that today the access on fixed line doesn't sell alone. It comes with content. Now the issue here is a very big one, to say yes, it's great story for the consumer, because consumer will get now access bundled with a great rich content. But will the monetization go to the content suppliers and OTT players, or will the access providers be able to garner some bit of that profitability and revenues?
There will be a slight shift in who controls how much content goes into your subscriber. And at the back of it, Jio will work out very, very attractive revenue share deals with content people. So to say that, you know, they would get strained on content and their revenues from their pure access will therefore just be restricted is not true. By virtue of having the power of control over the consumer, which is to be able to bill the consumer, to be able to have complete access to the consumer, they would have a reasonable amount of market clout in being able to determine what kind of content is going to go. That said so, consumers will demand everything. And if Reliance Jio doesn't provide them with the whole spectrum of content, the consumers will always are likely to shift. But then the question is, shift to whom?
Now there's going to be a big battle between 3 or 4 players. I think Airtel had a virtual monopoly on the great quality access over the last few years because BSNL, MTNL were struggling with old fiber and copper. And today they will have a competition from Jio. So I think price-wise they'll be competitive.
My concern for the incumbents would be that if their experience doesn't match the Reliance Jio experience, then very rapidly the complexion of the whole market could change. Yes, initially, if the competitive offerings do not throw up content of the same richness as is available today, there would be some hesitation in adopting this. But very, very rapidly, they will get over this hump. And knowing Jio, if the initial adoption is sluggish, I have no hesitation in saying that they will quickly make market corrections.
Two telecom veterans on Jio's fiber launch. Market regulator SEBI, meanwhile, has ordered a forensic audit of Sun Pharma's financials. Financial statements for 3 years leading to March 2018 are under the scanner. Bhuma Srivastava of Bloomberg News now joins us to tell us what we know so far.
So Sun Pharma told exchanges late last evening that they've been ordered by SEBI to undergo forensic audit for 3 years, as you mentioned. They did not explain what triggered the audit, but the broader understanding among the street, the investors and the brokerages that this could be a fallout of the whistleblower complaints last year that had led to a stock slide on account of alleged corporate governance lapses. So this could be like a continued probe on that account, but we'll know more as the company discloses to the exchanges.
Bhuma, thanks for that. There's also a new petition on Indiabulls Housing Finance. The Citizens Whistleblowers Forum has filed a public interest litigation with the Delhi High Court alleging round-tripping by the company's promoter. Shefali Malik is here with the details. The company, of course, has refuted all of this. Shefali.
Well, yes. So as part of this petition, what the petitioner is basically saying is that the company gave huge sums of money to large corporates, and the money was being routed back to either Indiabulls Group or either the promoter group companies. It's also talking about that the fact that there are hundreds of companies registered at the same address. So probably there's something fishy out there. And going into the details, so the petitioner has analyzed 5 companies, or the loans given to 5 group companies, and how the money was routed back to Indiabulls group companies and the promoter group companies. So the money was given to Reliance ADAG group companies worth about 1580 crore rupees, and the money was routed back to 9 group companies. Then there is a Chordia group. The amount of about 1210 crore rupees was given, and that loan was squared up. Vatika group, 4600 crores. Many of those companies to whom the loan was given, those companies were effectively pass-throughs, and 400 crore rupees which has come to the notice of the petitioner was plowed back through debenture via subscribing to debentures. DLF, 1700 crore rupees worth was a loan was given, out of which about 66 crores was invested back in subsidiary of Indiabulls Group. Then there is an Americorp Group, about 151 crores was given, and which in turn was invested back in the 4 group companies. Now, why an SIT probe is being sought by the petitioner? Mainly because there's large sum of money that Indiabulls has borrowed from PSUs and private banks. So there's there's investors money at stake, and also shareholders money which is at stake here. And Indiabulls, in turn, we spoke to them in the morning. The management, of course, is saying that there is no there's no routing back of money, and there is absolutely no investment by any of the borrowers in either Indiabulls group companies or any of the promoter group companies. So they are completely refuting all these allegations. So this is one developing story that we do need to keep an eye on.
So these spate of moves are clearly motivated to perhaps disturb the merger process, and one follows the other. So this time we've chosen that we would want to fight this out in courts to end this speculation once and for all. From our point of view, no borrower of Indiabulls Housing has on date a single rupee of investment in our founder and chairman's companies, personal companies, Samir Gehlaut's companies. Samir Gehlaut further is absolutely debt-free. He has no borrowings whatsoever. So all these allegations are, false on the very basic fact.
That's a view of Indiabulls. Even as residential real estate developers struggle with the slowdown in demand, commercial developers have been relatively resilient. That could be what's giving K. Raheja Corp the confidence to list its real estate investment trust with a portfolio of commercial properties. Sources tell Bloomberg Quinn that Raheja is in talks with Blackstone for the same. Ashwini Priolkar is standing by with that exclusive story.
India will soon get its second REIT or real estate investment trust. We have learned from our sources that K. Raheja Corp is in advanced talks with the private equity firm Blackstone to file the prospectus by the end of the year. The proposed structure will have K. Raheja Corp holding 85% and Blackstone Group will be holding 15% stake. The fine print is still being worked out. 10 million square feet of under construction and 20 million square feet of completed properties will be part of the REIT's portfolio that will include at least 10 offices of K. Raheja Corp that are present across the country under the brand names of Mindspace and Commerce Zone. The real estate developer recently acquired Citibank's former headquarters in Mumbai's Bandra Kurla complex. That too will be part of the portfolio. The company is in the process of appointing bankers to manage the process. The Raheja Corp hopes to file the DRHP by the end of this year, and the listing will take place most likely in the next financial year, according to our sources. Neither Raheja Corp nor Blackstone has responded to our email queries. We will know more when the REIT is finally announced.
Tech Mahindra has signed a deal with AT&T to transform their IT system. This will involve accelerating their IT network application, enabling advanced software, 5G network and migrating non-network workload to cloud by 2024. We spoke to Tech Mahindra CFO Manoj Bhatt, who said this is one of the largest, if not the largest, deal the company has signed. Listen in.
It is a significant transformational deal with AT&T, who's one of our key customers. All in all, I think it's a 6.5-year deal, which we will help AT&T transform its estate, and we will be partnering with them along this in this journey. It will be one of our largest, if not the largest deal, which we have signed.
Indians love new brands more than anyone else in the world. Only 2% of the consumers prefer to stay loyal to a brand. That's according to a study by Nielsen. Charlene D'Souza spoke to Nielsen's Chief Commercial Officer Patrick Dodd about consumer behavior in India. Listen in.
How are consumers actually looking at brands in India? Is there stickiness with brands? Because there's also, some consumers are actually moving from unbranded to unbranded right now, especially towards the smaller packs. But is there stickiness within brands, or are they still experimenting with brands? If you could throw in some flavor, and also globally, if there is stickiness with brands even today.
Yeah. So one of the things we are seeing is there is more choice out there than ever before for all kinds of reasons. Digital being a big piece of that, but even just the amount of brands that are out on the marketplace, be it in beauty care, be it in pet care, be it in household foods, be it that people are trying new international products in different, the world is globalizing. So the choice that consumers have is huge. And that's what's making it tougher for marketers out there. Manufacturers are building brands, retailers are building brands. And what we're seeing right now, we've just completed a study worldwide taking a look at loyalty or disloyalty, depending on how you want to look at it. And again, India ranked #1, but on the disloyalty scale, meaning that only 2% of Indian consumers said they will stick only with their existing brands. A good majority of them said they are looking forward and they love trying new products. And then a few of the consumers also said they like to try new products, and they will, but they need to be swayed a little bit, which means there's a big battle out there for share of mind and share of stomach or share of wallet in terms of the Indian consumer right now. And India did rank #1. The global number there was 92. So that even shows globally there is a huge opportunity for marketers and companies to still steal some share or really build the trust in their brands and continue to innovate so they can really stay ahead.
Infrastructure projects that have been already struggling with execution delays and availability of finance have another problem on their hands, a shortage of bank guarantees. Lenders have been slowly pulling away from the product since the beginning of this year. Vishwanath Nair is here to tell us why.
Right, Ira. So, as you said, they have the lenders have been pulling away from the product at the beginning of the year. Since the beginning of the year, this primarily sort of emanated from a from an advisory that was given out by the Indian Banks Association in December 2018. Essentially, the advisory stated that if you're issuing a bank guarantee, then you should have a 1-year claim period on top of the guarantee period for you to avoid any kind of future liabilities. While the idea was clear that this is just an advisory and it is not legally mandated that you should have a 1-year claim period, this led to a lot of confusion amongst the lenders. The lenders were not sure if that 1-year claim period will give them freedom from the liability, or if they will face still problems from cases, especially where the government is a counterparty. Typically, government agencies tend to be more litigious in situations like this. And therefore, some private banks who we have spoken to, they have said that the private sector banking system has largely decided to go very, very slow on issuing bank guarantees, especially to EPC contractors who work with governments to develop infrastructure projects.
Thanks, Vishwanath, for that. Let's move on. The billionaire founder of the world's largest hedge fund, Bridgewater Associates, Ray Dalio, sees a 25% chance of a recession in the United States, both this year and in 2020. He spoke to David Rubenstein on how central banks can respond to such a scenario. Listen in.
A recession, it's 2 negative quarters of GDP. And we're going to be hovering, I think, fairly close to that level. And there's a certain variation around it. But the bigger things are a combination of the absence of effectiveness of central bank policies. So I hope we can talk about those, together with the wealth gap. A large wealth gap. So when the next downturn comes, what that will look like socially, politically, and so on. The elections, which is a issue between, let's say, capitalists and socialists, or the rich and the poor. And then the emergence of China and in relationship to the United States. Those 4 factors are factors that have not existed since the 30s. I think they're unique. And so when we get into the question of the recession, I think it's how that will affect those other things, and those things affect it.
Now, you're in the investment world, your firm was well known for quite some time before the last recession. It was a very successful firm before. But in the last recession, your firm performed extremely well, maybe better than any other major hedge fund. So, as I recall, you're up 28% or something like that during the worst year. So, are you anticipating a recession now, and are you changing your investment approaches, or you're not quite where you were in 2007?
In 2007, it was pretty easy, I think, to calculate that there were these debts that were going to come due, and that there was not an adequate amount of funding. And so that sort of debt crisis was something we anticipated and we were positioned well for. When I go through those calculations, it's not the same. In other words, the amount of maturing debt and that whole problem doesn't look the same. It looks more like a gradual squeeze having to do with quite a lot of debt of a certain type. But with that, also pension liabilities and healthcare, particularly as that produces a greater squeeze. We have large deficits and so on. So the amount of promises that we have are large, but they're going to be coming at us at a more gradual pace, and I think that's going to produce a squeeze. I think related to that, what's important is that when you don't have monetary policy, being able to be effective. What kind of monetary policy we will have? We will have, more than likely, a lot of debt monetization.
Our time on the show. Thank you so much for joining us today.